In 2022, Treasury bills, otherwise known as T-bills, rose in popularity because the yield on these T-bills increased to an all-time high, especially in December 2022, where the yield on the 6-month T-bill was at 4.4%, the second highest since it last peaked at 4.73% in 1988. Today, I'm with Joyce Tan, Head of Singapore and Asia Fixed Income from UOB Asset Management, who will tell us more about Treasury bills and the United SGD Money Market Fund. Hi Joyce.
Hi.
So for people who are new to T-bills, right, we go straight into the basics. Explain what it is all about first. So what exactly are T-bills and how do they work?
Simply like the way I explained to my son, T-bills basically means government bonds. Right. So at the moment now, we can subscribe to government bonds at 6 months and 1 year. So now the most common one will be 6 months.
Yes.
And because it's being issued twice every month, compared to a year treasury bills that usually they only issue once every quarter. So you only have 4 issues within that year. And interestingly, like treasury bill, I think most people are very comfortable with buying fixed deposit.
Yes.
So when you place fixed deposit, say you put 1,000, say you put for 6 months, 12 months, you basically will only see your money plus the coupon interest, or rather plus the interest rate at the end of 6 months or 12 months. But what feels very good about buying treasury bill is that treasury bills are priced at discount.
Yes.
So if you put $1,000, you apply for $1,000, you just need to pay $960.
Yes.
So when you go to the bank and you put in $1,000, and let's say today is the auction day, at the end of the day, say about 5 p.m., you realize that you got $40 back to your bank. You actually feel very good about it because you are seeing something like an interest, except that your $1,000 you can only see 6 months down the road or 1 year down the road, depending what you buy.
Right. So speaking of that, right, I was wondering, are there any like pain points when it comes to getting T-bills? Personally, I would say from my own experience, or maybe from other people's experience, because my friends also invested before. So I think what they were saying is that it's not 100% definite that whatever that you want to put into T-bills, you will get it. That's one of the pain points that they said. Are there other things actually maybe you would like to share?
My family buy T-bills as well, so I feel the pain myself, so I can illustrate from the beginning to the end. Firstly, you must have that MAS auction schedule as your friend.
Yes, you have to always go and check it.
Yes, and the next thing you need to know is your next friend will be your calendar. Because you need to mark your calendar, because the auction always happens on a Thursday. But if you are, I'm not sure about other form, but I apply it via the bank. The bank has a cut-off. You need to apply it by Wednesday.
Right.
I have friends who have forgotten. Come, Joyce, I forgot. Go and mark your calendar. Then the next thing, of course, like what you mentioned. Okay, the day comes, Wednesday. You go onto the website. You apply. Then the next tricky thing is that what is competitive?
And
what is non-competitive?
Yes.
You'll be scratching your head, right? So for non-competitive, it basically means that you are indifferent with the rate that you are setting, whatever the strike rate, because it's an auction, you will take it. The only difference is that if there is $100 bond to be issued, only 40% will be allocated to that portion of people who wants a non-competitive.
Yes.
And if you have more than $40, you will definitely get a partial allocation for that. But if for that day only $30 applied for that non-competitive, then you are fine, you will get a full allocation. So there will be some uncertainties whether you get it or not.
Yeah.
Then of course come to the competitive. Scratching your head again, what exactly competitive means? Competitive means you set your rate. at what rate is comfortable for you. So we have example of people using the CPF money to buy into T-bills. So they are putting in their money in replacement of what the money could have been earning at 2.5%. So then they may think, okay, let me have anything that's above 2.5% is enough for me. Maybe I put in, if I like a nice number, 2.8. So you can put it 2.8, and you pray hard that the interest rate auction strike price hits above that 2.8. But for some reason, some people want to play low ball, spoil the market. I hope nobody, whoever's watching this, please don't do that. But there are people who just don't want to think too much. Okay, maybe I put 0%. I'm going to get guaranteed allocation, right? But there could be some people who think that way. So to guarantee your allocation, then that's one way. Another way that I will encourage people to think about, there are many options now, and bank has already upped their fixed deposit rate, so you can take that as a reference. Of course, bank comes up with certain criteria. Maybe you put 50,000 one rate, 100,000 one rate, and I know OCBC has a special rate at $1 million. That's the highest range. So so you can take that as a reference and see what is the minimum rate you like. Yeah, other pain points that I may mention is that unlike fixed deposit, you can go to the bank and withdraw it once you place, except that they may not pay you your interest. Basically, just get back your principal. But what about T-bills? The thing is that we have 6-month and 1-year T-bills, and the question is, if I change my mind, what can I do with it? What are the sources I can get back my money? The thing is that secondary, we call it secondary trading, is almost not there unless you're willing to take the pain to even cut into your original amount that you invested to get back your money urgently. So I always tell my friend that for MAS bills, MAS Treasury, make sure that it is money that you can put aside. It should not be your urgent money. It should be a money that is above what you spend on your food. Above that, it's extra money that you can keep a while, keep away for 6 months, keep away for 1 year. Then you can think about buying the Treasury, buying the T-bills. And that is why these are the pain points that when you buy into your T-bills, you got to be very mindful that you're going to part away with this money for a time being. So in a sense, if you urgently need that money back, if you sell it in the secondary market, you are going to get a hit for sure.
So is that everything? All the pain points that we have covered so far?
And other things that I realized, once the T-bills enter into your CPF account, you will not see the maturity date. All you see is just numbers indicating the issue that you bought. There's no detail. So besides marking the calendar, having the schedule, you also need to mark your own calendar when this T-bills is going to due. Because no one's going to inform you, hey, your bill is coming on due on certain date. Remember to reinvest. So you always have to track that as well.
Right. So it's a lot of admin work on your own. I see.
The other thing is also, say the issuance issue on Thursday, the maturity comes on Tuesday, usually Tuesdays, Thursdays. So your money, unless it comes in a fixed time, because sometimes you may need your money, sometimes your money could be hanged somewhere when in the midst of transferring. I get into that as well, because I sometimes don't get my money by Wednesday. If I miss by a day, then I cannot participate in the auction. So if you have money 6 months down the road, make sure you time it so that you can roll it. So that part can be a bit painful that you need to monitor manually.
Yeah, and if you miss, that means you
It's
missed
okay.
it entirely.
You wait another 2 weeks and hopefully you get a better rate then.
Right, okay. So, we have already discussed very much in detail about the pain points of T-bill investments. So we move on to what we are really here for today, which is to talk about the United SGD Money Market Fund from UOB Asset Management. So I believe this money market fund is supposed to counter some of these pain points that we have discussed. But then, before we really talk about it, right, maybe you can let us know what exactly is a money market fund.
I would position money market fund as a step up to a fixed deposit or instruments like a T-bill. Except that money market basically is a unit trust funds.
Right, okay.
Managed by professional like us who is trained to do the job for you, take away the pain point for you. What it does is that money market, as the name suggests, is very close to money. So like cash, people were expecting stable return. People do not expect that you take too much risk. So for this unit trust, I would rank it to be the safest of all. And typically, by the industry standard, we do not want or we do not allow the fund to go under $1 because usually unit trust is issued at $1. And you should expect a slow incline in terms of the unit trust fund that you buy. So what exactly is a money market fund or what it really buy? It would be your usual safe stuff. It can be fixed deposits. It can be treasury bills that we talk about. It can also be very highly rated corporate bonds where we usually call it, is simply say it's just a IOU issued by company, and the term of such is also very short dated. But at the moment for the United SGD, United Money Market Fund that we manage at the moment, for last year, I guess everyone know that rates was going up.
Yes.
And that's when all the interest for T-bills, and we took the chance to almost exclusively only buying the T-bills for this fund. So currently the fund, about 97% part of it almost, to buy into T-bills exclusively.
Right.
So it has been riding on that rising in interest rates, and so far mimic what individuals would have got if you buy into your T-bills on your own.
So just now you mentioned that right now the United SGD Money Market Fund consists mostly of T-bills, right? So in that case, what are the features or like the benefits of investing in this fund as compared to just going for T-bills? I mean, since it's already largely made out of T-bills, right? So what's the benefit? Why would people choose to go for this money market fund as compared to just simply investing into T-bills?
One interesting thing that I noticed, which I feel that most of the people do not know, because as we started this conversation, we say that T-bills are 6 months and 1 year. And everybody can participate in it. So you will have people who use their 2.5% CPF money and try to buy into it. They may lowball the rates. So it's very much dependent on what's the pool of investor going for this issuance. So the rate can differ a little bit. For money market fund that I manage, there is another security, we call it MAS bill, which can comes in 1 month and 3 month period. The 1 month and 3 month period MAS bills, these are not open for subscription by the public. It's only exclusive to institution funds like us. So what makes the difference? The difference is, again, like I mentioned, for the T-bills, you have people using CPF money, which is 2.5%. They have this concept, as long as above 2.5, you are fine. But for that MAS bill that we participate in the market, this like I mentioned, is only exclusive to market players. So we can place 1 month and 3 months, and these are more closely linked to the market movement. Of course, for example, like going back to our conversation, once you buy into your MAS bill, you are locked out for 6 months, 1 year. So a unit trust allows you to buy at any time. You don't need a schedule. Today, your father gives you a sum of money. Today, you can go and buy a unit trust. Or today, you saw a handbag that you like. You can go and sell your unit trust and get back your money quite quickly. Compared to you have to lock yourself up for 6 months or 1 year. So that would be the advantage. The other advantage, beside those things that we have mentioned, is also the fund. Unlike retail, once they have the money market, the T-bills, they are not able to sell. And it's also difficult to sell. You may incur loss of your principal if you try to sell. But for us as a unit trust funds, we have ready access market partners that we can work with to be able to sell it at minimum cost.
Right.
And also as a unit trust, we can schedule the maturities and even arbitrage if there is better opportunity elsewhere that I can buy certain issues at higher interest rate compared to another issue or lower interest rate. So can always do the job for you, make it easy, so that at the end of the day we try to enhance the overall return for you. Similarly, because when you buy a T-bills, what you try and do is to enjoy the higher interest rate compared to, say, your savings rate or even your cash return. So unit trust basically try to mimic similar function, except that we take away the pain point for you. You don't have to monitor, you don't have to think what you want to reinvest, because we will do it for you.
Right.
And say, for example, when you buy a T-bills, it's very fixed, 6 months, 1 year. What about you have a need in 3 months' time or 9 months' time, something in between? Then how do you manage that? It gets a bit more challenging, but when you buy a unit trust, you can buy at any time, any point, sell at any point, any time as well.
So there's that flexibility,
definitely.
And then there is also that convenience.
Also, another thing I observe, right? Say you buy a 6 month, 1 year, you need to sit out for 6 months and 1 year to so-called get back your return. But every day your money market fund is accrediting that portion of interest each day you leave it there. So the amount that increase is on a daily basis is a slow uptick every other day. So the price that you sell today, or rather the price that you get tomorrow, will be higher than the price you get today, because it's accreted every day. It's a smaller portion. So it's not a lumpy sum.
For people who are very interested, in this United SGD Money Market Fund, how do investors get access to this?
This one, you can go to our platform, and I think our fund is also being sold in some other channels. You can call on UOB AM, and I'm sure my colleague will direct you at that. We also have a digital platform. Yeah, so I'm sure you can.
Various, just Google search.
Yeah, Google search
We will
everything.
put the UOB Asset Management website on the screen somewhere, so people can refer and go to the website to keep a lookout for it. Yeah. So actually I do have one more question. In December, if I remember correctly, for T-bills it was like 4.4, right? Then but from there it has been going downward. So it's a downward trend. What do you think about how does this affect the United SGD Money Market Fund? Will it continue to be attractive, or is it not so attractive anymore at this point because of the dropping yield?
I guess dropping yield will affect every other investment. So it's not just towards the money market fund. But I think the money market funds will still have its attractiveness. Like I mentioned to you, take away your pain points and professional management. You can sell anytime you want, buy anytime you want, don't have to plan, don't have to do anything, basically just buy and lock it in. But for the interest rate at the moment, it is very interesting that the current interest rate is something that we have not seen in the last 15, 20 years. I have been in this industry for the last 25 years, and this is the rate that it was when I joined the industry back in 1997. So I'm pretty happy that rates are where it is now. Of course, the question asked is, will rate continue to come down and reduce, and therefore making money investment not as attractive anymore? There is a possibility, of course, and when rates are too high for some time, it's never too good for economy. You'll come to a equilibrium. But I would say at the moment, I personally feel that I still feel inflation everywhere. So once you have inflation, rates are likely to stay sticky. That's how I feel. And another technical thing about inflation is that in the past, why are we having such low interest rate? Is also that growth in China making everything cheap. So that helps in a way that prices are kept low and not as attractive as per now. But you look at what has happened in the last COVID season and how companies has tried to react, it feels like China being the factory of all may not be sustainable. So people will need to find alternative manufacturing plant points, and this will cause duplication. And once you have duplication, the efficiency will drop, and therefore price may continue to stay high. If price stays high, you have inflation and your rates will stay high. Another structural event that we are now experiencing is all this ESG, environment, social, and governance. And there's this move to move away from coal investing into more efficient energy, renewable energy. So you have less investment in the coal space, more investment into all this new energy. What would that mean? I'm sure your mommy paid the bill. Your mommy could feel a lot of pain recently, paying all those utility bills, because I'm a mommy, I pay bills. It's very painful. So you see all this natural, structural event that's happening and cause that money to be paid for all these utilities and commodities, all these are kept high. And once you have all these, because these are basic building materials of the society, so if that cost becomes expensive, when oil becomes expensive, your trucker, you don't have children, I'm sure, but
everything is more expensive.
Everything is more expensive now. If I try to travel now, it's going to cost me 100% more. So things are more expensive. And the other thing that we are watching is also, of course, we do not know when war will stop. This war between Ukraine and Russia. Initially, we thought it's just going to last for 2 weeks, but it's already a year already. And those are the things. War, by nature, is also inflationary. So all these things, if you look at it in totality, will rates really move back to where it was? I personally think that it is quite challenging. But it's good for us because rates will continue to stay high, elevated. We continue to buy T-bills at 4%. Great for us. Great for savers.
Thanks so much for your insights, Joyce. Like you mentioned, investors can definitely still consider investing in the United SGD Money Market Fund. as an alternative to investing directly in T-bills. Even though the yields for T-bills have been dropping, I mean it's still pretty high at the moment, so definitely still a good consideration.
Sure.
And to the viewers, right, if you would like to learn more about the United SGD Money Market Fund, please visit UOB Asset Management website, which will be displayed on the screen here.
Thank you.
Thank you.